the cloud. All right. Good evening, everybody, and thank you for joining me here on this webinar. I have missed you guys. It's been a while. Welcome to Embrace the Numbers, a three-phase accounting strategy to help you get better financial health in your business or your life. You can apply these however you feel necessary. I am one of your hosts. My name is Alita Hall, and my fabulous and also amazing accounting co-host, Ty Green. So let's get into this, shall we? First, let me tell you a little bit about myself. I am Alita. Accounting and bookkeeping wasn't always part of my dream. I used to want to be a lawyer. Can y'all believe that? But I took a government class in high school, and well, that was the most boring class ever in life. And so I chose another path. I got started in accounting because I needed another elective in high school. I needed another elective credit in high school in order to graduate. And accounting was the only one that sounded interesting. Once I got into the class, I absolutely fell in love with it. And it turns out I had a natural gift for it. So my teacher encouraged me to pursue this in college, and I did. So now, 20 years later, here we are, and I'm still doing the thing. I've had my own business for, I'll be 6 years this November. I've been working with real estate investors and landlords for almost 10 years. I hold an accounting degree as an associate and a bachelor's. And I've been doing this a while. And it's not just applied to y'all. I really do like this stuff. Y'all will see. Once we get through the webinar, y'all will see. I really like this stuff. So I'm going to turn it over to my co-host, Ty, and let him introduce himself.
Yes, thank you, Alita. Well, my
Where's your
name,
picture? I'm sorry, your picture's
oh,
gone.
that's okay, because you all can probably see me, so it's a kind of newer one. But anyway, my name is Ty Green, and I have the liberty of co-hosting these webinars with Alita for, what's it, 2 years now? Yeah,
I think this is
two, three.
midway into our second year.
Yeah, I don't lost count. We did so many and shared so much good stuff. So I'm always excited to host these webinars, and especially when Alita presents, because she drops some nuggets. And I always bring my book, my case, because I'm sure she's going to drop some wonderful information on us. Um, but a little bit
Oh, you're
about
making me
me.
blush. You're
I'm
making me
sorry.
blush.
I'm sorry. But a little bit about me. I bring over 22 years of corporate accounting experience to my business, which is Thai Lam bookkeeping systems. And I pretty much specialize in the system side of bookkeeping. So my main focus is all about setting up systems, bookkeeping systems to be more exact, so information can be reported accurately and efficiently for both financial and tax reporting. So I'm a big advocate and specialist for that. Um, in my past working life, I served as a director of accounting at an educational institution where I implemented accounting processes and did a lot of analysis work, general accounting, basic accounting, pretty much you name it, I've done it. All right. And also, I am an instructor. I've been teaching accounting courses for, 15 years now. I started teaching at vocational level. Then I went on to community colleges, and I currently teach at Kennesaw State University in Georgia. So teaching is what I love to do. That is my passion. But I also love teaching business owners how to effectively manage their bookkeeping. So I'm real passionate about that. And I'm also a certified QuickBooks Pro advisor. I have a master's degree in information systems as well as a bachelor's degree in accounting. And something that I like to share that is kind of unique about me is that I love subways, more specifically the New York City subway. I love getting lost and learning my way around on the subway. And one of my main bucket lists in travel is to ride subway systems in some of the largest cities in the world. So that's my weird thing that I like to do. But as a leader stated, I love doing bookkeeping and accounting as well. That's my passion. So that's about me. So now I'm going to mute myself and let Alita go ahead and do the presentation. So Alita, the show is yours.
Well, thank you, Ty. So, okay, this webinar, for those of you who are here live and those of you who will be catching the replay, on my YouTube channel. This webinar is for you if you want to learn implementable strategies that give you total financial control over your business. You want to maximize the benefits and get your taxable income and liability lowered. I'm going to show you how to do that. You can avoid those last minute chaotic things when you get your documents organized. That is a big, big thing. And it's one of the things that I propose everybody do first. Organize your documents. You want to be more confident in your financial decisions. And you want to stay current with those tax changes because let me tell you, as professionals, sometimes they change so fast, they make our heads spin. We walking around with whiplash trying to keep up. So if it's hard for us, we know it's hard for you and we want to make it easier for you. Okay? So if any of these 5 things are you, this is the right place for you to be. All right, let's get into it. We're going to be talking about 3 strategies today. One is effective record keeping. The second, understanding tax deductions and credits. They are not the same. And then tax planning throughout the year and how that will work for you. All right, y'all ready? Okay, let's get into it. Let's go. The first one, effective bookkeeping. This is the most important step aside from organizing your documents. You organize your documents, organize your finances. This is what bookkeeping does. It helps you organize those finances. Pro tip, accounting software plus your most valuable bookkeeper. For those of you who have caught our webinars before, that MBB equals more accurate records. If you don't remember any other math equations, remember this one. Accounting software plus a bookkeeper, preferably an MBB, such as myself or Ty, equals more accurate records. Okay, and remember, bookkeeping is the most important step. You can't do any of this other stuff if you don't do this one first. Why is it important? Transactions. This is the movement of money in your business. Every single penny that comes in, every single penny that goes out, every single day. You want to be keeping a detailed record of where you bought it, what you bought, how much it cost, the date, and what payment method you used. All of these are crucial in keeping your records clean. And if you are in real estate and you do rental property or short-term rentals, you want to be sure that you notate which property you bought that for, or if it was for the business as a whole. Because again, when you fill out your Schedule E for your taxes, they're going to ask you which property goes for these expenses and income. You want to read that detailed. Every penny going in, every penny going out, every single day, every single time. Okay? Let me know if I go too fast. Y'all know how I get. Reconciliations. I put this little video up here for you from our previous webinar we did on the 7 reasons to reconcile. Okay? Powerful decision making. Financial fitness. If you want more details about these 7 reasons, definitely go check that webinar out because it was a juicy one. So this is going to keep playing again, but this is the name of it, 7 reasons to reconcile your accounts monthly. And errors is the first one. You can catch errors. I can't tell you how many times as a bookkeeper, I've seen that errors are made either not by reconciling or when they try to complete a whole year's worth of reconciling in one reconciliation. You cannot do that. There are checks outstanding. There are deposits that are outstanding that need to be made and excluded from your reconciliation process. You cannot just select everything and try to get a bulk reconciliation done. They do not exist. I repeat, they do not exist. So I will make sure I grab the link for that webinar that tells you the 7 reasons why you want to reconcile monthly, because it will help you in your bookkeeping and in the duration of this webinar. We will go back to why reconciling is important. But before I do that, I want to give my co-host a chance to insert his thoughts on these first 2 slides. Ty, did you have anything you'd like to add?
No, you basically hit the nail right on the head. But I want to just go and reiterate about the systems plus the bookkeeper, having the accurate financial records. That's one, yeah, the tip, the accounting software plus the bookkeeper equals more accurate records. I mean, in my teaching, I stress this all the time with my students, and I stress this with my business owners too, is that when you have software like QuickBooks to be exact, all right, QuickBooks can do whatever it is you want it to do. And the main issue that I see a lot with businesses is it's not set up to where it can be efficient and effective. But the key behind QuickBooks is, even though it's sold as being easy to use and it can do a lot, you still have to think of it as it needs that person in there who understand bookkeeping. Because when the onion is peeled and you look at all the layers, QuickBooks is a bookkeeping software. And it takes bookkeepers who understand bookkeeping and accounting to use it effectively and generate the reports that's needed for financial analysis and tax preparation. All right. So I'm glad that you put this slide in there with this tip, is because I don't want anyone just thinking because they have QuickBooks that they don't need a bookkeeper, or the need for someone who have bookkeeping knowledge is no longer needed because QuickBook does it. Well, guess what? You may be able to enter invoices into QuickBooks. You may be able to enter checks and bills and all these different things. But QuickBooks doesn't automatically calculate depreciation or amortization of prepaids or all these other things that bookkeepers know and understand. So that is a good tip right here, is that sure, there's the technology, but you need that bookkeeper to make the technology work effective. Now I'll turn it over to you as with that. No, I said a
All right.
mouthful, but this really caught my eye and my attention.
You're absolutely right. And it goes so far beyond just financial analysis. There is this thing called operational accounting and bookkeeping. And what that does is it takes your finances and it marries them with the operations in your business. So you can be able to determine how profitable a certain department of your business is, or if you have the funds to properly hire, train, and retain employees. This is where the bookkeeping and the operations come together, operational accounting, but it all starts from effective bookkeeping. It all starts from there. Okay, so that tip down there, that's pro tip. Remember when I tell you we drop gems? That's a gem. Pick it up, store it because you're going to need it for later. Okay, now we're moving on. Document organization. Remember when I told you this is one of my biggest ones, and I prefer and I have my clients all do this? This is my actual filing framework you're looking at right here that I designed myself. This is my filing framework. It's called the Vault. Of course, there is other pieces that are missing from this because it is a product that I sell, but this is the basis. Okay, a lot of people come to me, I don't know how to even get my financial record started. I want to move from paper to digital. This is how you start with the year. Always start with the year. It's easier when you know what year you're working in. Okay, always start with the year. You can go month by month after that if you want to, but this is the preferred way. You have your bank statements, your credit card statements, any deposits, QuickBooks reports, receipts, tax documents, vendor invoices, contracts for your clients if you're service based. Okay, you want to have those file folders separate because then you're not sorting through a bunch of different months trying to find a bank statement, when you can go directly to the bank statement folder and then you can look up the month you're looking for. You see how that works, especially if you have multiple bank accounts. We know some of y'all do. So we want to make it very, very easy for you to find what you're looking for. And then when we get into document organization, there is naming conventions. How you name your files makes them searchable inside your database. So if you know that you bought a soda at Quickstar for $2.99, you can actually name it that and go directly to that receipt because that's what you named it. Or you can type in any piece of that name and find what you're looking for. So the structure of your filing and then the naming conventions both work in tandem for you to have proper document organization. It's the first step before you should do any bookkeeping. You always want to get your documents together first. In fact, that is the very first thing I do before I do any client work is I organize their documents that I need to work with. Every time. No matter, I've been doing this a long time. That has been my go-to for over 20 years. Document organization first, bookkeeping second. Okay?
Yeah.
Just want to give you that tip. But go ahead, Ty. You got some thoughts?
Oh, I thought I was muted. Sorry.
No, you're fine.
This is excellent. I mean, this, Vanessa, I tell you, definitely take note of this right here, screenshot it or take a picture of it because I feel that this is just the framework of even QuickBooks. I see you have QuickBooks on there, but whenever you generate any type of financial report, pretty much that financial report is going to come from any one of these documents that is listed here. So if you have everything organized to the fact that you can look at a report and go to any one of these folders and pull that proper information, hey, that's a big step with accurate and efficient bookkeeping, because I can guarantee if your documents are organized, your bookkeeping is going to be organized. They work hand in hand.
He is not
Definitely.
wrong. I've had clients who have come to me, immaculate document organization, just beautifully done. And their books, clean. There's a few missteps that happen, but for the most part, clean. Because he's right. Filed and well organized documents equals clean and accurate books almost 95% of the time. So again, we're marrying operations, finances. Okay, the name of the game. Okay, we are moving into our next topic. You guys know I try to keep these short because it's late on a Friday night. But tax deductions and credits. If you understand these benefits, you can significantly reduce your taxable income and your tax liability. And I'm going to show you how that works. A tax deduction versus a tax credit. I know there is some common misconceptions about which is which, so I'm going to help you clear this up. Tax deductions, they take effect before your tax liability is calculated, meaning they decrease your taxable income, the amount of money your business makes. Those deductions decrease that. So think about all of the expenses in your chart of accounts. Those would be considered tax deductions. Charitable contributions, maintenance and repair, accounting. Yes, your fees that you pay for bookkeepers, we are accounting professionals. That is a tax deduction to your business. 100% lowers your taxable income. Okay? So tax deductions take effect before your tax liability is calculated. Tax credits take effect after your tax liability is calculated. So they bring that liability, the amount you owe to the IRS, they bring that down dollar for dollar. So you think if you're in real estate, if you purchased a new home, you get a credit for that. You get earned income credits when you have children and you have worked a W-2 position. Okay, clean energy gives you a deduction. If you have created jobs in an area where they're giving tax breaks for that, you get a credit for that. Dollar for dollar, it lowers your tax liability, but these take effect after the amount you owe to the IRS has already been calculated. So I hope that helps you guys understand the difference. And the way these two work powerfully for you is because if you get your taxable income down to zero, because you have counted all the deductions that you're supposed to count and it's made itself to zero, guess what your taxable liability is? Oh, I'm sorry. Were y'all waiting for me to answer? I thought the answer was clear. My bad. Yeah, it's zero. They can't give you liability on something you don't have. And then if you have credits that you qualify for, they give you those. This creates a refund due to you from the IRS. Meaning the IRS got to pay you some money. They got to cut a check. Do you see how powerful that works? We have multi-million billion dollar industries taking advantage of this. And you want to know how they get to? Because they have a team of accounting and bookkeeping professionals on their staff. Those MBBs and MBAs, most valuable accountants, most valuable bookkeepers, they live and breathe this stuff. And then they have their tax professionals that live and breathe this stuff. So part of our job is to make sure we are tracking every single deduction and trying to get you to qualify for every single credit that you can qualify for. So we lower your tax liability, we lower your taxable income, and we try to get it to it. If you owe nothing, that's great. But if you get a refund from the IRS, now we're talking. Right?
Yeah.
How you have something to add?
Yeah, this sounds great. I mean, this is a concept I started talking about many years ago when I used to do business taxes, you know. Um, and I always like to say that everything that you mention here, deductions versus credit, and especially the tax liabilities being reduced down to zero, it all comes from capturing everything and making sure that it's accounted for. And how does it get accounted for? Having that accurate bookkeeping system and process. So it just opens up, it's amazing because it just opens up so many areas to focus on, so many topics, so many webinar ideas. It's just, I find that this is amazing stuff, because you can talk about one concept, one topic, one webinar, and you can form 5 different webinars off of one. So this one is huge
Absolutely.
right here because it just focuses in on everything that we've been talking about over the last 2 years. It just blends itself together nicely.
Thank you, Ty. And so, as I don't know if you guys have noticed, but we're building up to something, right? We're building up to the most lucrative part of accounting services as it stands today. So you have the first step or the first stage is your bookkeeping, right? And then the second is these taxes. But stay tuned because it's all going to be wrapped up very neatly in a beautiful bow when we're done. Okay. Next is these tax deductions. They start with your expenses. That's it. You cannot get any tax deductions if you have no expenses. I don't know how I can make that any clearer, any simpler. You want to track your expenses. If you have put so much of your own money into your business, like most of us have when we start out, you want to track all that money. And I'm going to tell you, it's for more than just deductions, though. This is going to be a whole other conversation, but it's the equity that you'll be able to pull out and then some if you choose to sell your business. You want to track how much you spent on your business yourself. That's your personal investment. And that's your retirement fund when you sell your business, right? But when we're talking about these tax deductions, if you're not tracking any expenses at all, or you're barely tracking them, you miss out on lowering your taxable income, which it then will increase your tax liability, the amount that you owe. So you want to capture every single expense, whether it's a taxable deduction or not. You want to capture every one of them. Every one of them. Because even those that aren't tax deductible, they can help you figure out where your company is hemorrhaging money. You want to be able to control spending? Oh, yeah, we all want that. Personal, business, whatever. We all want to control spending. This is the way to do it. You start with where the money is going out. You start with expenses. This is how we start to capture those tax deductions. Next up are tax credits. They were established as sort of a loyalty program with the government for businesses who were behaving a certain way that benefited the country. So these are why tax credits exist. Think about your affiliate marketing programs. That money you pay to people who market your business, that's like a tax credit. Does that analogy make sense for you guys? Is that gelling? So it's the government's loyalty program for businesses who are doing good things that the government already has incentives for. So it's a loyalty program. Don't you want to get all those rewards? I mean, I use my Pizza Hut rewards all the time because my son loves pizza. So I use those credits against my bills. See how that works? I owe Pizza Hut. Those reward points come in. I owe them less. That's how a tax credit works. Exactly like that. So I'm going to kick it over to my co-host.
Yeah, just think about Capital One, buy, spend points, use to reduce credit. I mean, with you balances and all that. Yeah, that's a good analogy. I never thought I really like that linkage. I never thought of it that way. That's giving me ideas.
So I want to make this easy for you, for our, you fellow business owners to understand, because I know some of these concepts can be out there. Sometimes for us, some of them are out there.
Hmm.
But when we are able to engage with someone who gets us to understand how it works, all the light bulbs come on.
And that's a good point because that's what I really see with bookkeeping, with everything that we do. Once people see the value of it, then it starts to connect. It starts to be clear. It's like it doesn't become so much of a daunting task, but it becomes more of a task that is needed and a task that if you want to know about how your business is doing, to take advantage of everything and tie it together in a bow, hey, you have to have an understanding of bookkeeping. And, in general, that's life. Once you have an understanding of something, then you can really start to see how it works. And then the big thing about it is once you see how it works, you begin to appreciate it. All right. And that's one thing that I always love to teach when I coach is appreciation of it. Once you see and understand, you're going to appreciate because everything that you're talking about here with deductions and credits and accuracy, all that comes from bookkeeping. And to me, that generates the appreciation of it. I don't mean to sound like a psychologist, but that's how I kind of blend everything together.
Well, there is some psychology to it, because
Mhm.
once you understand things and you gain an appreciation for them, then you can have fun with it. You
Mhm.
can start to enjoy what you're doing. You can even gamify it,
Yeah.
right?
Yeah.
Imagine seeing your bookkeeping as a game. Like, you know what? I'm going to make the IRS pay me some money this year. Think about that. And you're going
Mhm.
to be able to do it legally
Yeah.
by only applying those taxable deductions and getting those credits that you qualify for through your business,
Yeah. It
that
always
your
goes back.
business qualifies for.
And it always goes back to the prior webinar that we did when I mentioned the client I was working with one time who said he didn't want the IRS in your business, in their business. Well, if you have the appreciation and the understanding, you definitely want the IRS in your business so you can take advantage of the loyalty programs and refunds possibly. So it's all about understanding, which leads to appreciation. Can you,
Absolutely. And
yeah.
And remember, those tax credits is just a government loyalty program. And believe me, you want to join this program. You do. All right, on to our final topic of the day, ongoing tax planning. No, it is not something you
Oh,
only do with tax time. It is not something you only do with tax time. This happens all year round. When you proactively tax plan for taxes, you can completely prevent those unpleasant pop-ups and help yourself take advantage of the opportunities to minimize your tax liability. Okay? You want to start doing this today. And I mean all of it today. Not just this part, all of it today. Start this today. Okay? Today. Can't emphasize that part enough. Right now, today. Why? Tax planning can help you with future projections. Imagine for a few moments with me. You're sitting at your computer, it's the end of the first quarter. You know exactly how much income you've made, and I'm talking your net income, because that's after all of your expenses are taking out those taxable deductions. That net income, 9 times out of 10, It's going to be about equal to what your taxable income is. Now, if you can identify what your tax liability is based on that income, you can plan for a future quarter. You can start paying down this tax liability sooner, meaning you get to keep more of the money your business makes. You can give out bonuses. You can give raises. You can pay yourself more. You can bring on something new because you're already planning for these, right? Those future projections, ongoing tax planning helps you do that. And it's not just cash flow projections, it's everything projections. Everything. You can project what your future tax liability will be based on what's happening right now in the current quarter in my scenario. You can do this on a monthly basis if you want to. But it helps you to stay in control of your money so the IRS can't pop up and tell you that, oh, you owe this amount of money. They can't tell you that. You know precisely how much you owe. Okay? Ongoing tax planning, future projections. You want that arrow to stay going up. You don't ever want it to dip. It's not a dance. You're not dipping your partner. This is your money. You want that money to stay up. Large expenditures. For most people, their tax liability is the largest expense they have. For most of us, it is. How would you like to be able to not have that? Just as simple as that. It's just an everyday expense now because you managed it and you're planning for it and you got the bookkeeping going. Your documents are organized. You know what deductions that are taxable for you. You know what credits you're allowed to take. Now you can plan for these. That once big, large expenditure, now down to a single quarterly payment made 4 times a year versus trying to come up with one giant lump sum. Then you've got interest and penalties if you're late. Now you don't ever have to be late. You're early. And no more large expenditures. Poof, they're gone. Or better yet, you can do a spend down and make large expenditures. See how it works on both sides? So if you need to spend, if you need like a $25,000 deduction, go get a company vehicle. Oh, look, there's one. Mm-hmm. So ongoing tax planning, it helps with these things. It works both ways. You can cut down on your large expenditures or you can ramp up on your large expenditures to help you cut down on your taxable income. The possibilities are abound, you guys. Hi, what do you think? You're muted.
I am so sorry. I really don't have anything to add to that. You have basically said everything. Everything in a nutshell. I have nothing to add.
So I want to go back for those of you who are just joining us. Thank you for being here and let you know what we're talking about. So we're talking about effective record keeping. We're emphasizing the importance of consistent and meticulous, and I mean obsessive compulsive disorder level bookkeeping. You don't have to be OCD to have OCD in your bookkeeping. That's why we exist. The bookkeepers will do it for you. But it's so much more than just syncing your bank feeds. Okay? So much more. There's recording every single transaction, whether it's money coming in or money going out. Who owes you money, who you're loaning money to, and who you owe money to. Those are your liabilities and your accounts receivables. It's those. It's understanding the difference between a tax deduction and a tax credit and how they help your business. Okay, and now we're talking about tax planning throughout the year. Many people only think it happens at tax time. No, it does not, because tax laws don't just take effect at tax time. They happen all year round. So you want to be actively and effectively knowing what's happening, planning for those all year round so you can take advantage of every single opportunity that's available for you to lower that tax liability, okay? So that's where we are. So I'm going to get back to my slide over here. The last thing, a year-end review. This is where you take a look at everything that has happened. All the tax planning and payments that you've made, all the deductions that you are qualifying for. If you need to make any spend downs, this is usually when this happens. You start planning for your conversation to get your tax forms done and sent in with your tax professional. Sometimes that will be your bookkeeper because they do both, but I don't recommend that segregation of duties and all of that. That's kind of one of my mantras. But this is when the year-end review happens. You're looking at all your financial reports. You're looking at all your estimated tax payments that you've made. You're taking a look at every single expense that you've got, and you're making the changes, and you're discussing the possibility for what's going to happen next year. And this doesn't have to, you don't have to wait until December 31st to do this. You can do this at the beginning of the fourth quarter, which is when I recommend it happens. Because anything can change between then and December 31st. So you want to be taking a look at your books about October. You want to take a look at your books in October so you can make adjustments in case anything happens. And how do all of these stack up together? The bookkeeping, knowing the difference between the tax deduction and credit and why they're important, and all this ongoing tax planning, because all three of these turn your business into a well-oiled financial machine. It gives you complete control over your business. Don't you want that? You want to be so aware of your money that if it's like a pulse and it jumps, you're going to know where it jumped at and how to fix it. That's why we exist, to help you do that, to help give you that control. We don't control your finances. You do. We just control what it looks like in your books should you ever get audited and you've got proper records and documentation. That's our job. Now, before I move on to our next slide, Ty, do you have anything you'd like to add as we wrap this up?
Certainly. I know I always talk a lot about account systems, as you know, and QuickBooks Online more particular, because I know that's the wave that Intuit is going. But when I look at, this slide right here, the year in review, and I look at what QuickBooks has, it's like everything that you just mentioned. It's like at the end of the year, it's like you can pretty much do everything that you mentioned in QuickBooks, as it gives you this year in review where you can go back and review transactions. You can go back and review reconciliations. There's a nice checklist that exists to where you can do all these things before you even submit anything to your tax professional. And that's what I always like for business owners to understand, is that before you can submit anything to the tax professional, this year in review is going to make sure that everything is captured, and go over that with your bookkeeper. Definitely, have the bookkeeper review all that and make sure that everything is in line, because checklists and year-end reviews really helps you capture even things that you mistakenly missed when you thought that all your I's were dotted and your T's were crossed. But this year-end review just makes sure that everything is ultimately captured before submission to your tax professional and in turn to the IRS audit. So it is critical. I mean, all of these tools are available. And as professionals, it's our job to make sure that everything is there and in place and managed properly. So that's all I have to say about that.
I love that you mentioned that all the I's are dotted and the T's are crossed, because the one thing that I feel that most people forget is those lowercase J's. They have dots too. So this year-end review helps you dot those lowercase J's so you don't miss anything.
Right.
So you
Absolutely.
definitely want to make sure this is happening. Now, I know I went through this kind of fast, but like I said, it's late on a Friday night. It's still summer. It's cooling down. People want to go outside. They got things to do. So before I get any further, I'm going to recap this. Keep your bookkeeping current all year. I know it's a chore. Oh my goodness, business owners, we know it's a chore. We do. We know a lot of y'all hate it. We get it. But we're here to help you. So there are all types of professionals who have services that will fit you wherever you are, whether it's budget conscious or you don't have the time or you want to understand and you want someone to walk you through it first, or you just want to wash your hands with it. You want to throw everything to somebody else and be like, here, you do it. We get it. We are here to help you. That being said, I'm going to give y'all some harsh truth. There is no excuse for you not to have your bookkeeping current all year. With all the professionals out here with every type of service to offer to help you, there's no excuse. I'm speaking to myself and Ty and anybody else who's listening, because we all have accounting we have to do. There's no excuse to not have your accounting done all year round. None.
Right. And then tax professionals are not accepting those excuses anymore either, from what I understand.
They are not. And if you are not coming to a tax professional with your bookkeeping done, 9 times out of 10, they'll send you away until your bookkeeping is done. And they got a limit on when their calendars are going to be open and when they're going to be taking clients. You have to take that into consideration too. That's part of that year-round tax planning. Even when to meet with your tax professional is something you need to plan for. Okay, number 2, be mindful of your tax deductions and credits. Again, deductions happen before your tax liability is calculated. They lower your taxable income. Tax credits happen after the liability amount has been calculated, and those lower your taxable liability, the amount that you owe the IRS. Okay, so be mindful of which ones apply to your business, both deductions and credits, and their limitations. I forgot to add that. Those deductions and credits are subjected to limitations. A lot of people are trying to comp as many meals as they can. That's no longer a full tax deductible expense anymore. Mileage has increased. If you're tracking mileage, you want to be mindful of the limitations and the changes that happen. Okay. And number 3, review your plans all year long. You can do them on a monthly, do them on a quarterly, but please do them more than once a year. You miss out on amazing opportunities to capture things when you do not do that. Because some of these have date limitations. You may have missed the date to capture something because now they no longer allow it. Or you may not get grandfathered in because you didn't put that thing into business until after the start date for the new tax credit. Some of those do not have the, if you do it at the end of the calendar year, you can start on December 31st and still get it. No, some of those don't work like that. So review your tax plans and adjust accordingly throughout the year. All of these things work together to keep your business financially sound. And this is the end goal. This is what any of us professionals want for you. We don't want anybody having to close their business because they can't afford to do the things they need to. You can't pursue your passions. We don't want that. Okay? And just for those who have come in late or who are watching this video will be uploaded to my YouTube channel, so please stay tuned. I will make sure that I get you guys a link to that so you can go watch the whole thing. So now we're moving on to the question portion. Does anybody have any questions? Feel free to come off your mic or pop them in the chat if you've got questions. We love to answer questions.
Yes, definitely welcome questions.
Bring them on. And there's no such thing as a bad question. So if you're shy, there's no such thing as a bad question, except for the one you don't ask.
Okay. I don't really have a question, but I wanted to make a comment about the vault. I really like that idea.
Well, thank you.
I need to incorporate that into my business.
The filing framework, it came out of working for someone else who kind of had a system, but I felt like there was something that was missing. So I created my own. And when I tell you it has helped me get my clients' documents together in the easiest way, it makes it easier for them to share it with you as a professional when they create it on their side, because it's simply a couple of clicks and they've shared their entire financial history with you. It makes it so much more effective for both us to do our job and for them to get information to us in a timely manner. Timeliness is important when you're dealing with financials. It's important because who's got time? Who can remember what they did 6 months ago? You bought something for $5.99. Are you going to remember what you bought for $5.99 6 months ago? No. But if you have that receipt and it's scanned, you don't even have to wonder. You can go right to it and be like, oh, I bought a pair of socks.
Mm-hmm. And that's always been key, especially in my corporate experience, is when I'm doing some type of financial analysis and I'm drilling down on a financial statement, the ability to drill down on the transactions that make up that amount on the financial statement is key, but also being able to drill down to the documentation is even better, because now you have your documented proof of where it came from, and then you can always justify that documentation on the financial. So if there's ever an audit or if there's ever a question, you have the documentation attached to each one of those transactions that you're looking at, and it'll just make your life as a business owner easier, and it'll be so much more availability and stress-free, you know, doing an audit or even tax preparation or anywhere. So that is mostly the key importance to that, is being able to drill down to that document, because it is the document overall that makes up the financial statement.
Indeed. And not only that, but think about credit card transactions. There are so many business owners out there who are not line by line iteming their credit card transactions. They miss deductions that way. So if you, as a professional, give them, a way for them to send you their documents, you can make sure you capture those deductions for them. Because I'm not a fan of bulk entering credit card expenses. I'm not. If you have a group of the same type, like if you go out to eat a lot, okay, that's meals and restaurant. You can still group them together, but it's still itemized also. So, but when you just group everything together in one lump sum transactional entry, you miss deductions because you can't deduct any of that. You don't know where it goes. Those receipts, they help you determine where it goes. Even sometimes if you have to go line by line item on a receipt, I've had to do that to make sure they're capturing the proper deductions, especially in a real estate business, when you've got 75 pounds of nails to go to this construction over here. But on that same receipt, you bought a can of paint that goes to place B, and you bought wood flooring that goes to place C, but they're all on the same receipt. And in real estate, they have to be separate by the property that it is attached to. So that line by line and that document organization is critical for the deduction part of this entire webinar. So yes, file organization, that's how important it is. That's how important it is. It's another one of those lowercase j's. Y'all are going to hear me say a few things a lot. We're dropping gems. That's the first one. I'm going to say that a lot. MBB, most valuable bookkeeper. If you're a business owner, you should have one. C, and the third, lowercase j's. We have to dot the lowercase j's. Okay? Remember those three things, okay, you guys? Are there any other questions or comments?
Good evening, everyone.
Hi, Rose.
Hi. Just want to say thank you because it's my first time attending, and
Oh, well, welcome.
Yes, I joined the group a while back, but I've just been so busy. I haven't got a chance to really attend anything. So I just want to say thank you for organizing. And the few statement I've heard gives me an incentive to come back. So I appreciate it. Thank you.
Oh,
Well, we have
from
them
the
every month.
from the Facebook group or?
Yes, she said she's from your group.
Yeah, and the
Oh,
Facebook group.
okay,
Exactly,
great,
yes.
great. Well,
We
welcome.
have these once a month, at the last Friday of every month. So next month it is on our esteemed co-host Kai
I already
to
have
let
the
us know
topic. I
what
already
he's going
have
to be
it.
talking about. Oh, well, look at that. Can we know what their topic is?
Yes, I am. I'm going to basically be talking about bookkeeping appreciation. Um, just sitting
Ooh,
here listening to everything we discussed in this webinar tonight. I'm going to introduce everyone to bookkeeping appreciation and kind of stressing what I always say, that tax preparation is the bridge. Well, bookkeeping is the bridge to tax preparation. I'm going to spice that up and be like bookkeeping is the bridge to business appreciation. Just have to remember what I said, because sometimes I say things and I it just go out of my mind. But I'm gonna write this down pretty much. But yeah, I'm gonna talk about
it's
bookkeeping
recorded.
appreciation. Oh,
It's recorded.
I may yeah need to, when you upload it, I may need to go back and listen
Oh,
what I
I'll
said.
send you the link. I'll send you the link.
Okay, but yeah, I'm gonna focus on that.
Well,
That's yeah.
you know, I got nothing but appreciation for bookkeepers.
Mhm.
So I can't wait for that one. I can't wait for that one. But
Yeah, so
Rose, thank you for attending live your first time. That's fantastic. I'm glad you're here.
yeah, thank you, Rose. Definitely.
Thank you. Yeah, my father's an accountant, so I've always been fascinated with that and that part of entry and keeping records. I tried to myself, but it's just like every now and I'm not consistent, but just listening to how you present it so well, and especially the part you said you have to be meticulous, almost like obsessive
Like your
compulsive
OC.
meticulous.
Yes, you
I
do.
like that word, because I'm like, yeah, it's true. It's you have to break it down because that's how you get the deduction. For me, that was the light bulb that went for me. I said, man, I need that. Um, so hopefully I'll learn more and join because I want to learn the business. I want to learn how to do it better. So thank you.
Well, you
We're
are
here for you.
definitely in the right place.
Yes, definitely.
All right. With that being said, thank you all for attending live. Thank you for those who will be watching the replay. I am so glad you guys are here. I can only speak for myself when I tell you this particular topic is a big one for me because so many businesses want to skip to the tax and tax planning part. And there will be some people who can tell you that's possible, but it's not going to be accurately reflected if the bookkeeping is not done first. You cannot tax plan for numbers you don't have. Anybody can tell you, oh, my business is going to make $1 million in its first year, and you're basing your tax plan off $1 million. And guess what? You barely clear 10,000. Then what? Then what? Exactly. No one knows. So always do the bookkeeping first. It is better to tax plan off a previous year and make assumptions versus to tax plan from nothing and have to make corrections. I'm going to say that again. It's better to tax plan from a previous year and make assumptions than it is to start from nothing and have to make corrections. Okay? Now, you can reach me, Alita Hall with AMH Bookkeeping LLC at the following. My email, phone number, and website are listed. I will have this up on my YouTube channel. You can find that announcement on Facebook, so do follow us on Facebook. We are also on Instagram as that's THE .re.BKKEEPR, the RE Bookkeeper. Okay? If you can't find me, just search for my name. you'll find me on Instagram. And this is where you can find Ty. Why is your picture not coming up? I have your picture. It's supposed to be right there. You're muted and I can't hear you, but your pictures are on here, I promise. Your logo is too.
Yeah, I'm sorry. I have to keep mute because I'm actually in the lobby computer area, so I don't want to disturb with the what's going on. But yes, thank you. I am Ty Green, and you can reach me at the website that you see there. Also, the email Ty Green, and you can follow me or reach me on Facebook at T Green GPS, Facebook and Instagram actually at Green TBS. So I'm always available as well if you have any other questions. And I'm also the administrator of my Facebook group, which is called Start Your Bookkeeping Business from Home. Pretty much I give tips on bookkeeping, and I'm glad that Rose joined us from my group. See, I post about interesting topics. I also offer courses on how to start bookkeeping businesses. I also have classes in QuickBooks and everything because that's my main focus. But pretty much that's where you can reach me if you have any other questions. And I definitely look forward to the webinar next month as I'll talk about bookkeeping appreciation. I wrote down my tagline, so I'll definitely remember it after tonight. But Alita, as always, I enjoy co-hosting these webinars with you. It's very interesting. It's very intriguing. It just gets better. We're 2 years strong. We're going to keep it going. So much that we have to talk about, so much information to share. And I'm glad that I have the pleasure of doing that with you because I learn and grow from you, from your energy, from your passion, because I was always looking for someone that's passionate about bookkeeping, that not just someone who's like, it's something I have to do, but I'm always about passion. I was born and raised in a passionate sports city, Philadelphia, so I definitely have a passion for things. So I enjoy these webinars, and I definitely look forward to them going and getting better and better and better.
You and me both, because I always learn something from you. In fact, one of your previous webinars, like I think the very first one you and I did together, that was about proper tax mapping.
Mm-hmm. Yes.
A lot of what you said inspired me to give the tax deduction and credit portion of this webinar today.
Wow.
Like I remembered a lot from what you said, and that's how I was able to give so much on tax deduction and credit. So that was all you, Ty.
Thank you. Appreciate it.
I'm learning and I'm growing from you. And as we feed off each other every month when we swap doing these, I noticed that the confidence is so much stronger and so much more prevalent. But not only that, the information that we give just becomes that much more clear, less jargon free for our audience to understand. And I know for you and I both, that is a huge component of these webinars, is to make sure that people who are watching and listening, they understand what we're talking about.
Absolutely.
So
absolutely.
I have been enjoying these since the first day you asked me to. And I don't have any intention on stopping. So
that's great because I don't.
You're stuck with me.
You're stuck with me too. And we're both Tauruses, so
Oh, there we go. But again, thank you guys so much for joining. Rose, I promise I will have this video uploaded as soon as possible so you can catch the beginning because there's some good stuff there. And with that being said, we are right at an hour. I don't know how I did that, but go me. And I will see you guys next time when we have Ty talking about bookkeeping appreciation. I might get all dressed up and fancy like for that one.
Yeah, I have the whole concept, so I'm looking forward to presenting that one.
So if there's any other questions, please feel free to reach out to me on Facebook, Instagram, email, my website, wherever. Do not hesitate. I'm always there to answer questions. Okay. With that being said, I will see you guys next time. Bye.
Bye.
Bye.